Welcome back, everybody. Today we're going to be talking around the question of what's the overall framework and strategy when you're building a holding company. So I was having a really good conversation yesterday with one of our partners when it comes to, how we're going to be looking at this acquisition we just submitted a offer on. So, you know, over the last few years, just kind of give you my background, I dropped out of college when I was 19. I became a business broker around 1920. And now, over the last 6 years now, time flies, I've been was selling businesses. And I bought my first business when I was about 22. It was a franchise for doing loans for small businesses. I invested in a few content sites around the same time, and over the last, really the last 4 years, I'll say, we've been partnering with our investors to do deals with them, been growing our current businesses through acquisitions, and really just been partnering with our clients on buying strong businesses that we can grow through acquisition. That's really our foundational strategy and how we do deals. Now, that's kind of what we were talking about is that everybody does deals differently when it comes to this space. So, um, the core strategy I think that's taught nowadays is just go buy a business and get SPA on it. And another format is more flipping. Like I meet a lot of people who come into space from real estate and they compare it to like wholesaling, which is also a strategy too. Like you can definitely buy a business and flip it in 16 months if you want to. That's also a strategy. Um, but for us though, one thing that I realized in this space was that when you're looking at the foundation of when private equity became a thing back in the 70s, it started off as a LBO, right? Like there wasn't a term called private equity back then. Private equity is honestly a really recent term. It was originally just a leveraged buyout. And before an LBO, it was called a corporate raider. So really, at the foundation of buying businesses, corporate raiders were the first ones to really be doing this. Then they rebranded it into a levered buyout. From levered buyout, we went to more private equity. And now we can say that we're probably in the small business space, small business acquisition space. But for us, though, we were never really big into flipping deals. About 5 years ago, when we did that content site, that was the first deal that we flipped. And since then, we haven't really done much of those. I'll say for us, a lot of what we're doing right now is buying strong businesses that we can grow through acquisition. And a lot of our clients understand this framework of how we do it, but I've always been a big fan of Warren Buffett and how he buys companies. And it just makes sense to me, right? Like, if you can own a great business forever, you'll always be making money. And that's really how he looks at it, right? Like, he's looking to buy a strong business with a durable competitive advantage, great management, consistent earnings, at a good price. And he wants to hold this business for as long as possible and compound the the cash flow. And then you can reinvest that cash flow into buying more businesses. You can invest that cash flow into other stocks, into loans, whatever that might be, right? So he's building this compounding machine, and that just makes sense. And so a few years ago, we really started to switch out of the traditional, what I think most people are being taught nowadays, to really the more strategic approach to doing deals, which is how can we just build a compounding machine? And so, as we're looking at the Warren Buffett approach, one, just finding a small business with for great for great leadership and management, which it does depend on what kind of deals you're looking at. Meaning, if you're looking at businesses under $1 million in SDE, you might have trouble finding a good business that does come with 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 a management team in place. Management teams in place don't usually start to come about until probably I'll say $1 million to plus in net profit. And so the size of the deal will determine what you're looking for in each aspect of this. So first thing though is long-term hold strategy, finding a business right now that has a great management team. Next, consistent earnings. When we're looking at the financials, we want to see predictable cash flow. maybe recurring income sources. We want to see that over the last few years it's been really consistent in that it's growing, or at least that we can see how it is consistently showing on the financials. Strong business economics, um, good margins, very low debt, very low capital requirements, just an overall good business model for to be in. Then fourthly, just a competitive advantage. So whether it's their market, maybe it's their branding, maybe it's their access to certain partners or suppliers. What's the competitive advantage that's keeping this business different than the other people in the space? And like it says down here at the bottom, our approach centers on a long-term hold strategy and combining strategic acquisitions. We'll kind of dive deeper into this throughout the video. And I want to pause here for a second. If you are looking for your first deal, we do have a really awesome business for sale. It's doing about $130,000 SDE. The owner is willing to will stay on with the new buyer as the operator. And so really we're looking for a buyer that is really focused and has the skill set of for growing a business and scaling and marketing. For they will be the best buyers for the business. If you are looking for options, please reach out and we'll share details on that one for you. Um, Back to this. So just overall in our deal flow, we are looking for businesses that check these four boxes. So now, when it comes to the overall structure of the holding company, we are talking with the client. The next part about this is what's the progression? So first step is, right, we're going to be buying a business with a long-term hold strategy. We want to find a good business to own that we can own at a platform really. Next step is to reinvest the cash flow. As we're reinvesting the cash flow, we're going to be reinvesting in things like real estate, stocks, lending. We just want to keep the money growing. So all the money that we're making from our core business, like right now, for one of our companies, for basically all of them actually, we have accounts set up on different platforms that we could trade on. So there's different platforms like for Tasty Trade, for TradingView. There's like virtual Schwab account we just have different accounts with different brokerages, and we set up corporate accounts for each of our companies, and then we take just probably majority of the cash flow honestly, outside of what we pay ourselves, and then we reinvest that cash flow into right now. Stocks is big. My partner does a lot in trading. We're getting more into real estate and real estate funds. So we're just finding ways to compound the money from our businesses that we buy. And then from that income, we are reinvesting back into buying more businesses, paying ourselves, etc. And then this one is doubled, but the third one should be um, how we spend our compounded income. So once we reinvest the cash flow and we're earning returns on the money, the third step is what you do with the income from your investments. So from the income from our investments in the second step is where we're going to probably use that to buy more businesses or pay ourselves and fund our lifestyle. Meaning just financials 101, financial advisory 101. You shouldn't want to pay yourself from the income of your business. So when you buy the business, of course, you do have bills to pay and all that. But when you're buying the business, or even if you just start a business, you don't want to pay yourself all that income. Ideally, you start the business, then you invest the income from your business into other assets, then those assets pay for your expenses. So we're really doing the same thing here. And that's going from being just a deal maker to really being an asset manager. And we'll go deeper on that topic in future. So once we buy the first business, the next step now is to grow the business and to build the overall holding company around it. So now this is where we go from just buying the business to building a portfolio. So once we own the right business, the next step is to grow them through acquisitions. This can mean buying complementary businesses or media that not only strengthens the holding company, but also improves the performance of the assets themselves. So that's really the core strategy of how we approach things. And as I'm doing more deals personally, a lot of what we're doing is the same framework. I'm looking for great businesses that we can buy with our clients, um, and then we're growing those businesses through acquisitions. For example, one case study right now is a addiction treatment center that we're looking at. I really like this business because one, it does about $2 million in EBITDA. It comes with a management team, consistent earnings, competitive advantage with licenses in multiple states already. They're well capitalized already, and they're only asking originally originally they were asking $9 million. We got them down to 7 million, 50% self-financed. And the whole goal, as I was talking with my partner on this deal, was how are we gonna grow it? The main way that we're gonna grow it is, as we said before, through for growth through acquisitions. So we're gonna be looking at one, media assets, and then secondly, we're gonna be looking at business acquisition targets. So for the media side, there's options such as like the newsletters, Facebook groups, online book communities around sobriety, rehab. We're looking at educational websites, etc. Then on the business side, we're looking at probably hotel health businesses, sober living homes, etc. And so this kind of just gives you a good framework of how we look at deals and how we work with clients. Oftentimes, we're doing deals with the clients and then partnering with them on these deals as well. So that makes our life a lot easier and just a lot more fun. But overall, we want to combine the mindset of the top investors like Warren Buffett with the growth strategy of strategic M&A. And as we can combine these, it really just starts to build this wealth machine where we're buying these businesses, we're compounding that cash flow, and then we're growing the businesses by buying more assets to build a portfolio. And the goal is to eventually exit the portfolio as a whole. And so hopefully this video answers a lot of questions for you and adds value. If you have any questions when it comes to looking at different businesses for sale, please reach out to me. I'm happy to answer them. Thank you guys for watching.